everybody. Welcome to TraderMerlin Show. It is your Friday weekend edition. Yes, as you can see, I look significantly different than the thumbnail that the AI generated. Thank you guys for the comments out there. Yes, Big Ab. I look at this picture that AI generated of me, and I was like, well, it's a pretty handsome-looking dude there. They gave me a few more wrinkles than I think I actually have, but I guess if AI thinks I look like this, and I'll feel all right. There were a couple other pictures, maybe I'll share those with you guys a little bit later on, where it really just created my hands look crazy. Like I have 13 fingers on one hand. So the AI doesn't do justice to body parts like hands and feet. But maybe I'll let my hair grow out. It's got the salt and pepper about right. So cheers, everybody. I will be doing a whole new set of those pictures. As you guys know, the picture that I took originally was from February or March of 2020, and I had shaved, my hair was all disheveled, I had a big old beard, and not big old beard, but stubble and facial hair, and I was in a nice jacket, and I cheers the camera with a glass of whiskey, and that became kind of my Friday tradition. I will probably try to elevate that now and maybe look a little more dapper. I have a whole closet full of funky suits, which I may have a whole series of these whiskey drinking Fridays. So, cheers, everybody. I hope you all had a great day out there. I mean, I wanted to have like more of a celebratory picture because I have had, these last 2 weeks have been really good for me. I've had some just great trades. I really haven't taken any losses. Well, it's not really, I haven't taken any losses for 2 weeks. So, and when I say losses, I mean even just simple stop outs, right? Which aren't big losses, but they're small. Everything for 2 weeks has just been phenomenal. So knock on wood, really enjoying this current market trend to the upside. Thank goodness for that one. So cheers, everybody. Ooh, going to Fay Ranch. Ooh, that's a good one. Let's go into, I guess, the broader stuff, what happened. So I'm going to start off today just going through some of the macroeconomics that happened today. Of course, all eyes are on the core PCE price index, which I thought we'd see that number drop a little bit. Didn't. Let's run through the numbers right now, then we'll go look at a bunch of charts because there is a ton to talk about. Here is your economic calendar for today. Now, near the mid-pack is where you start to see the U.S. stuff. And really the big one that everyone is looking at was this. They expected to go from 0.2% to 0.3%, and I actually thought we were going to come out at 0.2, just because 2 weeks ago you had CPI numbers, which were much better than expected, right, lower, and then you had PPI numbers, which were much lower as well. So I thought, hey, this might follow suit there. We ended up being up 0.3%. Now, is that bad? Well, take a peek at this, which is the historical core PCE price index numbers. And I'll make it a little bit bigger for you guys. Oops, not that one. We'll make this part bigger. Oh, hell, never mind. I'm just screwing it up. If you look right here, this goes all the way back to 2012. And I'll even stretch this out further. And what I like to do is kind of see where's normal, right? What's norm? Where would it just kind of end up being the average? And if I put the cursor here, right where 0.2% is, I would contend that 0.2% would be the average, right? You can see that it just seems that it hits a lot of points. And yes, there's a bunch below it, but there's also a few above it, particularly when we get over here into 2020. So 0.2 seems to be kind of that line that would be deemed to be average or just slightly above average. Right now you're at 0.3, which I don't think is anything to freak out about. It's really if we start to get to this 0.5, 0.6 that the Fed's going to have issues. So yeah, we did see a spike today, a spike or a slight pop in that core PCE price index, but it was in line with expectations. And lo and behold, markets really rejoiced from that. There was a lot of other really positive things as well. So we have a lot of topics to talk about. But rounding out Friday, you saw personal income increasing and spending decreasing. I mean, again, I'm writing a book called The Guide to Getting Rich, and this is really what it's about. It's about increasing your income and cutting your spending, right? That's the fundamental building block of it. And then once you get to a certain point, you can start to allocate that positive cash flow capital into investments. So this is really good to see that the personal income numbers have been increasing and personal spending going down. Now, that's not great from a recession perspective or just economic growth perspective. It is good to see personal spending drop if you are concerned about inflation. Right? Less spending means prices are going to start to drop. So this is, again, part of the reason why inflation has been declining, because people are spending less, and that seems to be the trend. The last part here was the pending home sales, right? The pending home sales were, previous month, a decline of 2.6%. They thought it was going to decline 1%, and lo and behold, we had an actual 2.5% pop in pending home sales. Now, what do we attribute that to? Maybe I ask you guys that. What do you think would be the cause? Why all of a sudden do we see an about face here on on real estate, right? For me, I think it's fairly easy. We looked at the chart here a couple days ago when Don Braun was on the program the other day. We looked at this chart. He actually helped me draw the channel on it, which I will show you here in just a second. But curious what your thoughts are as to why we're seeing such an about face in housing. Issue was there that prices are elevated, although they've come down. Interest rates were very high, although they've come down. And that really is, to me, what's been the catalyst for that housing, I guess, resurgence a little bit. Are we back to bullish days of housing? Probably not, but look at the yield on the 10-year. If we go up to the peak, which was back in October 20th of last year, we were about 4.32% on the 10-year, currently trading about 3.5. So you're looking at about 0.75% decline in the 10-year, which of course should translate over to the 30-year being roughly 0.75% lower. Now that may not seem like a lot of money, if you got a $10,000 thing, 0.75%, no big deal. But if you're borrowing $500,000, 0.75% is a monumental difference in your annual payments. I actually wanted to do a show on that to illustrate when we went from 2.5% for 30-year fixed rates to 3.5% to 4.5% to 5.5% to 6.5%. What is the impact on a loan? And maybe I will do that one day if you guys are interested, just to see what the impact would be on, let's say, a $500,000 loan. As those rates increase, how much does your payment increase? And I think when you look at that, then you really understand and how much of a challenge it is for people to get homes with these much higher interest rates. So anyway, yep, Big Ed says lower interest rates temporarily. I like that you put that in there because I agree. I think it's temporarily going to be there. I have a feeling we'll start to see these interest rates slide back up. So all in all, good economic news for today. What did that do for the markets? Well, Naum says he's carrying Boyle in through the weekend. Funny, I sparked a conversation point. I got like a dozen comments, no real questions, but comments about natural gas yesterday after I did the show. All my natural gas has done great so far. It's only been 24 hours, or a little over 24 hours. But as you guys know, I am long calls. I'm long calls on April UNG, and I sold puts on April UNG. I didn't mean to use April UNG. I meant to do it shorter term, but at the rate of return that I'm getting for the April UNG puts, it comes out to be about 4.5% per month. So I'm actually thinking I'm just going to keep that because I think that as we get into March and early April, we'll probably see, yes, natural gas. UNG is the ETF that I was writing the options on, or selling the options and buying the options on. So that was a great one. And then Boyle, we talked about Boyle yesterday, and as somebody was saying, one person said, "You're crazy. Why don't you just buy Boyle?" So real quick, let's take a peek at Boyle. So for those who don't know, Boyle is a double long ETF. I think it's more of an ETN really, but it's just a derivative of UNG. It's using derivatives of it, so options and all kinds of different swaps to create a double inverse. So if natural gas goes up 1%, in theory, Boyle should go up 2%. So let's go and look at that price chart today. Nice little jump up, but it seems insignificant on the grand scheme of things. My natural gas. Attenzione Nicolo, dai. Questo è una televisione programma per la famiglia, dai. My Italian's heckling me over there. Anyway, as you guys know, I mentioned I sold yesterday the $8 puts, and I was over a 1.5% yield for one day. Fortunately, I'm out. My puts expired worthless, so I got 1.5% for one day, which is awesome. Now, somebody mentioned to me, and it makes sense, if you're bullish on oil, or natural gas, you're bullish on natural gas, why not just buy natural gas? Buy UNG, buy the natural gas futures, buy Boyle, instead of, putzing around with the options. Well, in one of the accounts, actually in a couple of accounts, I'm not allowed to buy directionally. I'm not allowed to buy the underlier unless I'm exercised. So with the one account where I did the Boyle in, I am not allowed to buy directly. And again, it's just rules I made in the account. So what I did is I sold the 8. If I got executed at $8, right? Today, if it closed at $7.99, Monday morning, I'd be long Boyle, and I would sell calls against that position. I am bullish on natural gas. I do think you'll see, maybe not Monday or Tuesday or Wednesday, but I think over the next couple of weeks, there's going to be a lot of volatility, but it's due for a bounce. That climactic volume yesterday on natural gas really just made me go, you're going to see a pop here. So good news is I capitalized on that pop with my long calls on UNG as well as my short puts. And then on this one, I collected the premium, and yeah, it was up 4% today. Would have been great, right? I would have made more money if I just bought Boyle. Instead, I made 1.5% for less than 24 hours on it. So I'm happy about that one. Expiring worthless. A lot of options I had expired worthless today, so happy about that. Let's start at the bottom, work our way to the top with regards to market returns here. It has been a phenomenal month for the indexes so far. We'll see if it ends that way. Starting at the bottom with crude oil. So crude oil is just struggling at this overhead supply zone, right? It just can't seem to chip through that. I know a lot of people have been talking about it. I was actually watching, look at some of the Traders Army posts talking about, they're feeling like a breakout here. Like you're going to see a breakout in the crude oil futures. Well, if that does happen, it makes sense that they believe that because it's chewing away at the supply that's in this yellow box, right? Between, call it $80 and whatever, $83.50. It seems to be just plowing through there, but it hasn't significantly done it, right? If it moves through this, yeah, we got some big upside potential, but man, it just feels like there's forces pushing it down. And the reason I say that is look at the red candles going all the way back to January 18th. The red candles are far bigger than the green ones. And you get this kind of couple days up, slams it down. Couple days up, slams it down. So if the track record is right, we should see in the next couple days for crude oil slightly positive. Of course, we'll have to wait and see on that one. So crude oil down 1.64% today. For the week, hasn't done much at all. Really just chopping sideways, slightly negative on the week. So I'll give us some weekly rundown numbers here. But if you go back to Monday's trade, that's Friday. If you go to Monday, which is there, that shouldn't be Monday. What am I? Oh, yeah, that's 5. So down 2.58% for the week. All right, fine. Most of it coming today at 1.64. Bitcoin, nothing to speak of here. Just sideways. A nice gain for the week on Bitcoin. We'll just put that one on the screen for you so you have that. 3.16% up for Bitcoin for the week. Gold, I actually sold some puts on silver today. Didn't do stuff on gold again because the premium just wasn't there. I do not see great premium on GLD. I see it on SLV as being much better. Dow stuck in the middle of the range. It's been a great week, but today spinning top, no real directional change here with the Dow. We'll get you the weekly numbers here. 1.72% gain for the Dow for the week, making it, on the weekly basis, one of the weaker performing indexes. S&P 500 was your third place finisher today, much better with regards to gains, and you were looking at a 2.44% gain for the week on the S&P 500, a lot of which was those big, or the last 2 days worth of trading, that big swing here. So 4,084 is where we close on the S&P 500, only a 0.21% gain. Russell 2,000. One of the better for the week. We will get you those numbers as well. You're looking at a 2.32% gain for the week on the Russell 2000, but that pales in comparison to the granddaddy, the El Nasdaqo. So let me 1, 2, 3, 4, 5 for the week. You're looking at a 4.54% rate of return for the NASDAQ 100. Awesome. And, I don't use my graphics. When I first started the show, I paid a good friend of mine who we used to work with. His name is Tim Sabick, just a great graphic designer. He made some of these graphics for me because he knew I was frustrated to leave an OTA, and I was like, okay, well, I'm going to start TraderMerlin and do that as my business going forward. Of course, I never turned it into a business, more just for fun. But he created some cool ones, and he made me this graphic, which is called the chart of the week. And I used to use this with a weekly session that I did, but I kind of shied away from that, doing that chart of the week. The chart of the week for me is none other than Tesla. So as you guys know, why am I not getting my Tesla here? Interesting. My chart's totally froze. That would really be a bummer for the show. Let me see if I can close out my browser and reopen it because for some reason my browser froze. That's wonderful. I'm hoping that your stream didn't freeze on you guys, but nothing's working on my. Hold on 1 second as I figure out what is going on here. Oh, okay. Really weird. Cancel. There it is. Somehow it just froze. TSLA. So I'm putting this down here as the chart of the week. I mean, what a phenomenal run this thing has. I'm really kind of, hey, Tim, he's here. I don't think you ever watch this show, man. Thank you. Yeah, I love all the graphics you've done. I don't use them enough, and who knows, maybe I'll start adding to the graphics here. If you guys ever need some graphic work done, Tim's your man. Great movie producer as well. Got to give him all the props. I mentioned yesterday how I was bullish on Tesla, and actually I've been mentioning it for the past few weeks. As you guys know, I've been selling puts during this sell-off here in Tesla. Have not been executed, so fine with me. Just keep going for lower price. I had the 125 puts, I had the 120s, I had the 100s. On none of those did I get executed, which is kind of unfortunate because today's move was, actually this whole week is like a holy cow kind of move for Tesla. I think Bill Gates is getting squeezed right now for the week. For the week, a 30.84% gain for Tesla alone with nothing else. And, I think you'll probably see this thing pull back here a little bit and take a little bit of a breather. But right now, you're getting short covering. You're getting just the emotional buys. Obviously, I did not get executed at my 125 strike price, so that was a great trade. As you guys know, that was, forgot the exact rate of return. I want to say it was 2-3%, maybe more than that for the week on Tesla 125 put. So been very good from the put selling side of things without taking too much of a chance. The big question now for Tesla is, where do we go from here? The real big number that I'm seeing for Tesla that's in front of it is 200. I'll put a big line right there because that will be probably the challenge over the next couple weeks is, are we going to get to that 200 mark, which is, we're at 177, so you got about another 23 points to get there. Well, it moved 17 today. It has been a phenomenal run. So there's your chart of the week. We have Tesla is just the best one. And it's funny because the way that Tim built that, it goes Monday, Tuesday, Wednesday, Thursday, Friday. Honestly, Tesla is probably the chart of the week every day this week, just how bullish it has been. Other pieces that were noteworthy out there. Dollar index, right? There still is that discussion amongst people asking me, where do I think the dollar is going? Well, look, I still think it's going to have a bounce here, but it hasn't quite hit that lower end of the demand zone. For some people, you look back to the zone that goes back to May of 2022. And you draw a little box around that one. This is not an OTA demand zone by any means, but I'm just going to draw that little guy in there, and then we will drag that out and hopefully get that over to our current prices just to see where it lines up. So hold on as I do some artwork here. Oh, boy. Right, so you are actually right now just tiptoeing into that zone. It hit it yesterday, hit it a couple times over the past few weeks. If this doesn't really have a bounce, I'm going to say by next week on that dollar index, and it stays at this level, then what will happen is it will most likely break down and start to go lower. So I am expecting a bounce, but I'm still bearish on the dollar, just because the trend is telling me to be bearish. Oh, sorry, I'm over here. You guys are watching me pick my ear. That's a nice one. Ben Shorty says, why are you playing with Tesla? Just by FFIE. Production starts in 3 months. You can make 3 to 400% easily, huh? 3 to 400% easily, he says. Oh, I love when people say that. Nothing's easy, bro. Nothing is easy. Oh, buy Faraday? Yeah, no. You can make some money, but there's a reason things are penny stocks. Yeah, I know, Judy. I was on the wrong spot. You can easily make great money on penny stocks, but you can be a gambler, Shorty. I'm not. Right? If anything, I'm a speculator, and if I had some capital, maybe I'd throw a little bit at this. But you look at how long you would have been sitting there in a downward, just losing proposition, losing money every month, over and over and over again. And now you're saying, hey, you can make 3 to 400%. Well, what if you bought it back at $6, $7, $8, saying the same thing, right? Everybody's a genius after the fact, and this thing was down to what, 26 cents. Oh man. So, could you buy Faraday? Yeah, I guess. I would actually rather go with, is BYD, I think BYD, I would actually rather buy BYD, but it's not, I don't think it is. Let me see here real quick. So there is BYD, no, it's Boyd Gaming. I got to check that, but BYD is the other car maker out of China that Warren Buffett's backing and got a bunch in. I would much rather buy BYD versus Faraday. But there's a lot of EV companies out there that have been beaten down, that may have some potential. You got your Lucid. All right, wow, hell of a day for Lucid. Yowza. Right, hell of a day for Lucid, at 43% today. Another one was Nikola, which is basically a scam. Well, and there you go. That one just stuck down at the bottom doing nothing. So I don't know. I'd be pretty cautious on that one. Again, if you are looking at FFIE, sure, there might be some opportunity, but it's also a lot of risk, and it's just too much risk for me. I don't know. I would move away from it personally, but yeah. With Sheena, you were talking about, yep, Lucid. Lucid might be the chart of the day, not the chart of the week, right? Chart of the week means you have to have some pretty big, this one-day spike doesn't really do much for me. And mind you, the market cap of this one is really low. It's not that impactful on any of the major market indexes, right? It's not one of those ones that if it goes up 40%, you're like, oh my God, the markets are soaring. But if Tesla does that, because of its integration to the S&P 500, because it's so heavily weighted in some of these indexes, that one has a massive impact, which is a large part of the reason why we saw NASDAQ perform so well this week is because of Tesla. It's because of other companies like, right? You had Apple having a phenomenal run off those lows. But guys, keep in mind, next week is a brutal week. Next week is one that is very, 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 very dangerous. Of course, all know Wednesday, we have the FOMC statement. No surprise there. We're going to get 25 basis points. Just because I think Jerome Powell, I have to have a glass of whiskey here real quick. Hold on. Jerome Powell can stop this market, snap of the fingers by his comments. And it's not the release that happens at 2 p.m. Eastern Standard Time. It will be the 2:30 conference, which really is stirs the pot, right? And if the press gets under his skin a little bit and maybe gets him to say something that he shouldn't, you could see the markets go absolutely haywire. So that's the big part. And of course, as you guys know, Thursday is the mother lode, the holy trinity of stocks reporting earnings. Apple, Amazon, and Google, 26% of the entire NASDAQ weighting reporting in one day. Just those three companies could really accelerate this market further or derail it. So Apple been on one hell of a run. My expectation is that this is in response to forecasting earnings. Alphabet, doesn't look as good. Certainly, it's been getting better. It hasn't made new lows, but it hasn't made new highs either. It's kind of just bouncing right along those highs. It is about $101.50. And then you have Amazon, which looks like, somebody's asked me if this was a cup and handle, and I would say no because it didn't really get to the neckline. But if it gets above and closes above, let's call it 104.50, then I think you're going to close that gap and see things really accelerate. So Amazon, next week could be its week, but Thursday will be a great day for that. Lucid featured high on Wall Street bets. Yeah, well, that's what you get. When you get something that's thinly traded, so, here's why you get a lot of this stuff with Wall Street bets. Most Wall Street bets people are not high-end investors, right? They're not institutional clients. They're generally going to be people who are just looking for somebody else to tell them what to buy. So what you get is the classic pump and dump. Someone will say, hey, tomorrow, let's get 4 or 5 influencers together, right? And they all know each other. Let's get 4 or 5 of us together, and we'll all start pumping Lucid, right? What they're not telling you is on Monday and Tuesday, they accumulated a mother load of Lucid. And on Wednesday, they make this release and, hey, yeah, you guys, dude, Lucid, short squeeze, here it comes, load the boat, buy, diamond hands, like fools. So what you'll see is when that happens, you get this mass hysteria from, I would call them low-end retail traders, people with not a lot of money. But you're like, well, how can they move this market like this? Well, what'll happen is institutions who are market makers for Lucid. Let me ask you this. If you had a business and you knew that there was somebody who was manipulating the prices of the assets that you were trading in, and you are required, remember, a market maker is required to both be buying and selling at all times. If I am in that business, or you are in that business, and you know that there's this group, and they're usually in Wall Street bets or Reddit chat rooms, and they're notorious for pumping short squeezes and pumping stocks, right? The classic pump and dump. Would you just never look in those chat boxes, never look in those venues of Reddit or Wall Street bets? Or, knowing that you have to sell as a fiduciary requirement to the markets, would you hire people to go into those Reddit chat rooms and maybe even encourage this activity? Because if I'm the institution who's got way more firepower than anybody else, and I know that the retail people are going to think that they're sticking it to the man by popping that thing up, what I will do is I will have my observers in there all the time, and when they say, hey, they're pumping Lucid right now, what do you think I'm doing with my sell orders? Remember, I'm required to sell, But if Lucid is trading at $10 and my spy in Reddit Wall Street Bet says, hey, now they're pumping. Now's the push. They're pumping this thing. What do you, am I going to still hold my sell orders at 10 bucks? I'd be insane. I'd be stupid to do that. What I'm going to do is I'm going to jump my sell orders on my Lucid in this example to 20 bucks, to 30 bucks. I'm going to put it so far out of the money that what it does is it removes the selling pressure. And so all these little Reddit Wall Street bettors are like, oh, here it goes, yay. Well, ultimately, they're going to have to sell, and I will come in and I will squash that price down, crushing a lot of those Wall Street bettors. Yep, raise the sell orders, Liz. It's a game. Don't be fooled thinking that Wall Street Bets guys are killing Wall Street. They're not. Wall Street Bets figured out that game, and I can tell you, if I was hired by a major market maker, this would be my main focus every day. I would have a whole team sitting in a Wall Street Bets chat rooms, being active. I'd even give my team trading accounts to trade and show, hey, I'm long this stock too, so they don't get suspicious of my guys. And maybe even I have them, here's where we go, real conspiracy theory. I may even have my team be the ones who are promoting the pump, because I know if I need to sell a position for a client. Here's how Wall Street works. Let's say that Jay is my client, right? And he calls me up and I'm his broker at Merlin Trading. He's like, hey, Merlin, I got 100,000 shares of Lucid I want to sell. Okay, what I'll do is I will ask him at what price. And he'll say, I want to sell it at $9. Great. Anything that I can sell above $9 is all my profit. So I can have my guys go into these chat rooms. Hey, buy Lucid, short squeeze coming. Citadel's short, let's stick it to the man. It's a short squeeze, buy. And I just flood it with that. Now I know this thing's going to surge. And my client wanted me to sell those shares at $9. And now I'm selling those things at $13, $14, $15, $16, $17, $18. And my client is none the wiser. My client gets his $9 per share. Hell, I'll even say I gave you price improvement and I sold it for you at 10. But everything above that is all profit for the firm. It is an absolute game, an absolute scam. This type of crap happens all the time. Now, to Tom's point here, he says Faraday was acquired by a SPAC. Faraday wants to sell $200 sedan. Most Americans want a truck or SUV under $40,000. Only money will be made on hype short term. Yes, I agree. I absolutely agree. And my feeling on SPACs at this point, yeah, I know you meant 200,000. I knew they're selling a $200 car. That's like a dozen eggs right now. Anyway, I might have been a little harsh on that one, but I think you all have to understand that when these Reddit Wall Street Bets guys are saying they're sticking to the man with diamond hands, I just laugh. I mean, if you think Citadel was happy shorting AMC at $20, they're loving it at 100. I mean, it's even more money for them. And whoever will be left holding the bag will most likely be the uneducated investor. So don't fall for this stuff. Be careful out there. Right now, EVs are hot. They're all surging right now. I don't think there's an EV company right now that's not surging. Matter of fact, I don't think there's a market segment that's not surging over the past couple weeks. It has been very, very bullish. The question is this the new trend? Or is this just a trap, a prolonged bull trap to get you in? You look at these long-term price charts here. I mean, this looks more and more positive every day. We broke that trend line. We now have broke out of the zone as well. So you have 2 consecutive days with closes that are higher. We hit 4,100 today. Did not hold above it. That's okay. But if we get a close above 4,100, it's just stair step up. You'll see this thing go from 4,100 to 4,150 to 4,200 to 4,300. I mean, it'll start stair stepping. And if that happens, then what we'll do is we will now change these lines. And we'll be looking as the bottoms in control. Right now, for the viewer or for the podcasters, I'm looking at a chart of the S&P 500, which has a very pronounced downtrend since January of the year. Right, we look at this almost every day on this program. However, at some point, maybe it's today, maybe it's next week, maybe it's next year, this will shift, and that downtrend's going to break, and we go into another bullish uptrend. That's just the nature of markets, and it feels like it's starting to do that. Yep, FOMO. Exactly, Robert. I mean, this last couple week move has just been nothing short of exceptional. At least the last 6-7 days have been phenomenal. I mean, again, NASDAQ up 5% a week, averaging 1% a day. Awesome. Is it too good to last? I don't know. Maybe. Have any SPACs done well? It seems like all have been a flop. Yeah, off the top of my head, Liz, I can't think, but there have been a few that have done rather well. I'm not going to say, let's check out DWAC. I think that one actually kind of fell apart. We've been saying that for a while. And Remember, I was ripping on this one. SPACs typically start at $10. This one shot all the way up to 175. This is Donald Trump's SPAC. You know, my guess is that horrible businessman, and I guess you could say he's a smart businessman, took all of his profits out of this thing and made a bunch of money on this thing and basically screwed everybody else. Who knows what's going to happen with this DWAC thing. But there's a failed SPAC. BKKT, right? This is the one that I was in for a while, but luckily I got out at $17. Thank goodness, because now it's trading at $1.73. And if you look back and look at the special, I'm patting myself on the back. If you look at the show that we did a couple years back on SPACs, I think I called him, let me see real quick. I think I called him a necessary, or the evil, or a blessing or a curse, right? So let me just real quickly go to my page, see if I can find TraderMerlin. I think I called him a blessing or a curse. And at the time, you know, there's definitely some merits for SPACs. However, I think the prognosis for me was I would stay away from him. Simply because, let me go SPAC. When these SPACs are acquiring another company, there's no real need to think about how much money you're paying. All you have to do is make them an offer that's too good to be true for that company. It brings them public at a completely overvaluated price, and then it can come crashing back down. Let's see, here's TraderMerlin. By the way, hey Tim, if you're still here, give me a good graphic for the header. This is like, I used what you made me and zoomed in on it, but I need something catchy and flashy there. Anyway, here it is, going all the way back 2 years ago. It's called SPAC, Blessing or Curse. If you're interested on it, check that one out. I think that paints the picture. I was optimistic because I think what it does is it allows some companies to come to market that may not have made it. And there's other ones that should never have come to market. And so many of these have been failures. If I had the time, if I had a research team actually, I would go through and I would say, hey, pull up the top 100 SPACs and let's look at all of them. All of them. I want to see all of these SPACs and how they performed. Out of 100, maybe 5 or 10 have done really well. Other than that, I think the vast majority are going to be failures. There we go. ES now is closed above the weekly 50-day moving average. Oh, was that the, we looked at that yesterday, right? We looked at the 50 versus the 200 for your golden cross. Put that ES on there. Here's your 50. I think that's a 200. Here's your 50. That's your 50 and the 200. Put both of those on there. First times in yeah, I think you mean 3 of 22. So from my perspective, it actually looks like it's closed above that 50-period moving average for a while back. We crossed above that back here in January. All right, let me real quickly go and just go SPY, see if that looks any different there. Yeah, still looks like you beat it. He took off today, no problem, Jay. Let him know. Cool. All right, let me go with some questions here. Sorry if you hear the dogs barking. My house guest came home, so there we go. Let me real quickly look at this one. This is for Skilled Stocksman. Good to see you, Skilled Stocksman. He says the Australian dollar futures contract, the daily contract, it has been running since January 16th on that daily chart. How do you look at that chart and determine that now is the time to put your stops above or below the previous day's high, in your opinion? Well, I wouldn't put the stop below the previous day's high. All right, let's go out here and go to Australian dollar futures, right? So there's your futures contract for the Australian dollar, right? It has been on a phenomenal run, which of course, if you're looking at the Australian dollar, you must be looking at the dollar index as well, right? Look at the Dixie. It has been a beautiful run. Percentage-wise from those lows back in October, right as I went over to Europe, was when this thing bottomed out, thank goodness, you are looking at a gain in the Australian dollar of about 15%. That doesn't seem like much when Tesla moved, 12% a day. It makes a huge difference when you're looking at the value of a currency. So, to your point, if you were long on this thing and it's just running and running and running, what a lot of traders will do is they will simply take a horizontal line and they'll move it below the low of the previous day. So, today, your stop loss, if you were long, would have been at 0.7045. As today closed, now you have two choices here. You could be aggressive and say, well, my rule is I'm moving it to the low of the previous day. So there is yesterday's trading activity. I will say it's below 0.709. And you keep moving that up. Now, what's going to happen is you're going to get taken out at some point, right? That's just inevitable. However, what you don't want to get caught up in is having your stop loss back at maybe down here at your original stop and letting this all come back and give it all back, right? Giving all your gains away. Everybody knows that's one of the worst things that can happen. You're up huge. You're like, yeah, baby, I'm rich. I'm buying a Bentley. And all of a sudden you're like, oh, man, I got stopped out for a $2,000 loss. I'm getting a Honda Accord that's used on Craigslist, right? Can't do that. So that's how I would do it, Skilled Stocksman. I would probably, for myself, I wouldn't put it below the low of yesterday's just because there's too close together. I might keep it on the low of Wednesday, the 25th, right? And that gives me a little wiggle room. Let it breathe, right? You can't get too tight. And you see how these last two candles have been very small and compressed, right? That's very tight. If you were to move your stop loss up below those lows, there's a real good chance that you could get stopped out on this one. So it's a question of, are you really happy with your gains and you don't want to give any back? Then move it below the low of today. When we open up on Sunday night, move below the low of today. If you want to give it a little more wiggle room, a little breathing room in there, then maybe you keep it, down here below the previous low, which is on Wednesday the 25th. Now, you could also add in ATR and figure out exactly, how big your stop should be, right? That would be a good point as well. I was lucky and got short 6 micros near the top today and hold over the weekend. Well, the good news from you being short, and by the way, you are shorting a runaway freight train at this point, so be really careful with that one. But the good news there is if you zoom out, you're coming right into this overhead supply zone. And I'll put that box on here. So yeah, I was watching the Australian dollar as well. You're looking, you kind of tiptoed above it today a little bit, but we haven't closed above it. So I would say if you get a close above this high from August 11th, and that high was 71.40, I would go, let's say 71.50. If it gets to 71.50 and closes above that, I would close out this Australian short if you're short. Because, you're literally Gandalf going to that big fiery monster in Lord of the Rings going, you shall not pass. Well, Gandalf was strong and all, but that trend on the Australian dollar, it's pretty damn wicked, looking real strong. So be careful out there if you're shorting that thing, but that's how I would do it, Skilled Stocksman. I'd put it above those highs. If you're, in this case, you're short, I put it above the most previous day's high, and then just keep dropping that thing down, dropping it down, dropping it down. There you go. Let's see. What time are we at? 37. All right, let me get a couple more questions here. So Chad sent in a long message, and Chad was asking all kinds of fundamental stuff about natural gas, right? Obviously, the natural gas move has just been exceptional, just jaw-dropping. Lots of talk about supply, lots of talk about, global economies opening up, lack of demand because it's not as cold in some spots on the East Coast. And he says this. I didn't keep all the macroeconomic stuff. I'm just kind of going with the trade setup. He says, here's my position, stop, entry, target on UNG. He says, entry's at $12. So bear with me as I put some numbers on my screen here. So I'm going to talk and type at the same time. But he's got an entry that he says at $12. He has a $2 trailing stop once it gets above 14. Okay, you need to start, no matter what though, with an initial stop loss, right? You can't, I do watch a lot of movies. I love movies, especially Lord of the Rings. I think it's one of the best sci-fi flicks ever created. Just brilliant. Anyway, I could go on and on about that one. So I think you're making a little bit of a mistake here, Chad. Once you get entered at $12, if it gets there, and I'll talk about that in just a second, you need to have an initial stop loss because you say a $2 trailing stop, you said stop 0, and then $2 trailing stop if it gets above 14. So I'm not sure what the stop 0 means. That means no stop? That ain't working for me. Definitely not. Yeah, I will get there. I'll let you know, Popcorn. Popcorn? I might even show you the popcorn trade of the day. So to that point, let's go over here and just look at the $12 entry. So one of my concerns on this one, Chad, is if you feel like natural gas is going to turn and you're using $12 as your entry, it's not even at $10 yet. So you're saying that this thing has to rise another almost 30%, well, at least 20+% before you consider buying it. I would contend, what about a break above 11? So if we were to put a tighter moving average, here's the 50-period moving average on there. Let's go and make this a 20. It'll hug price a little bit better. And maybe let's go tighter. Actually, a trader I knew years ago, he used to modify the moving average so that it would hug price. And I would argue that this is not a bad strategy. Notice it's still, this is the 10-period moving average. I don't normally use a 10-period moving average. It's not what I do. However, the example I'm showing you here is it's now much more form-fitting to price. And if I want to be early on a trend change, I want to make sure that it starts breaking some highs. So, I was going to say, if it gets above 11 bucks here, which is this most recent high on January 23rd, then maybe you take a shot at it. But, waiting for 12 bucks, you're leaving a lot of money on the table. That thing's going to have a pretty big run. Will there still be legs left on it if you get to 20 bucks or 12 bucks? So you could use something like this moving average and use that as your entry price. Bottom line is, it's still trending down. It still looks weak. It's very speculative to go counter trend trade here. Now, I am going counter trend trade because I do feel like there's going to be a pop in it. I also have a bit longer timeline, so it's not like it's a day trade. This is going to be a couple months. If you do get to 12 bucks and now you're in, fine. Your targets, as you mentioned, 23.50 and 29.50. So you're looking at 23.50 way up here at this this high from November, and then 28.50. That's 29.50. That's a little bit unreasonable. So when you do that, your reward to risk ratio is like 20 to 1. Probably not going to happen, right? There's going to be other areas that I would be attracted to, and I could go ramble off a bunch, but one of the main ones I'd look at would be somewhere right around 16 bucks. So I'd have to start looking at this downtrend in natural gas, UNG, and see where's the most likely to go. If it breaks 12 bucks, I don't think it's going straight to 23.50. I don't think that that's a logical stopping point for the near future, right? It's going to have to prove that this downtrend is over. It's going to chop sideways, start to make some new highs, and then once it does, then maybe you add to your position, but it's also going to have stopping points, just like it did on the way down here, right? It stopped, move back, continue down, stop, move back. It's going to have those, 3-step forward, 2-step back type of approach. So a couple things, Chad. Number one, when you make that trade and say I'm going long at 12 bucks, at that moment in time that you are long at $12, you should already have a hard stop in that system. If you're going to use a $2 trailing stop, fine. But you said you're going to use a trailing stop once it gets above 14. So not quite sure what your initial stop loss would be. You have to have an initial stop. If you don't do it. I believe it has a possibility of going up to 32 or 20 based upon spike ranges from the highs from 2018 and 22. Granted, UNG is a decaying asset. Yes, because it uses rolling futures, so that decays it a little bit. So, I would not set my sights on that $30 mark right now. At this point, I'm long. And what I'm looking at is I'm long on natural gas, right? I'm long calls and I'm short puts. So my target, if it gets to 11 bucks or even 12 bucks, I may actually lighten up my position just because I'm in a decaying option and I don't want to hold those getting too close to expiration. For the ones I'm selling, generally, like I say, it's 30 days, so I'm not too concerned about that. But the one that I bought, which is April, I don't want to be too greedy on this. I don't think you're going to see a turnaround in natural gas and all of a sudden it goes straight back up and hits 30 bucks. I think if anything, you'll get a pullback and it will continue down. Remember, we have the heaviest shorted speculation position we've had for 18 months on natural gas. Speculators are going to keep pushing this thing down. And maybe we get a pop, maybe it short squeezes some of them out, but right now the momentum is clearly down, so going long is definitely an aggressive play, which is why I went out longer term versus the short-term play. Thank you. Hey, thanks, Bob. Appreciate it. We love all subscriptions on here, and if anybody here is new, hit that subscribe button. I try to do the show every day, Monday through Friday at 2 p.m. Pacific. Sometimes I don't get a chance to, but I usually try to. So let's see. Yep, Skilled Stockman says, playing it safe, ready to get out if Mr. Market tells me so. Yep, that's the most important thing, right? It's not if I say so, or Jim Cramer, or Maria Bartiromo. That's what the market says. Alan, when is the next bonds show? Yesterday I got a 4-week bond at auction for $99.65. I think it has a yield of 3.95%. TradingView shows US 01MY is 4.5. Why is there a difference? Ugh. I'd have to ask Bill Addis. Bill Addis is actually be on next week, Alan. Next Thursday, Bill Addis is going to be on. Next Wednesday, Jerry Baldwin will be on. So I have a couple guests on. We can ask him then. All right, what else do I got? I'm waiting for the Anton location, 24-hour fit. Oh, really? That place turned into a dump. I was there yesterday. Are you at that gym? You go to that gym? As you can see, I need to do more workout, but I've been milking it. All right, there was one comment here. Here we go. So popcorn. let's go to Popcorn's question, and I'm going to have a sip of whiskey here, finish with Popcorn's question, and then we will wrap up the show. He says, I don't understand the home builder stock. Hitting 52-week highs almost. What gives? And here's the thing, right? I think Popcorn, when you look at it at face value, when you look at Toll Brothers, Lennar, KB Homes, Pulte Homes, you're thinking McMansions. You're thinking that the single family homes that, you can buy in Texas for $400,000 for a 8,000 square foot home. Diana Hill, who's one of my favorite real estate people. She is awesome. I've had her on the program a couple years back. Maybe I'll try to get her back on. She has her ear to the ground with regards to everything related to real estate. Very, very incredibly smart woman. And she was saying, look, there is a misconception that home builders are only building single family residences. And I had a friend just recently. She moved to a place that Ben Shorty here, the 24-hour fitness he's talking about, is on Anton. And in the parking lot to that 24-hour fitness, they built something called the Halcyon House, which is a monstrous, state-of-the-art, high-end, and I mean baller living. It is not your Roach Coach apartments. This is friggin' IP. They have everything. Golf simulators, epic pool sides. You have a whiskey bar. You got game rooms. You have a theater room. All amenities you could possibly imagine. I mean, it is epically nice. Guess who owns Halcyon House? I'll wait. It's a home builder. So what home builders are doing, they're realizing that the McMansion during the 2005, 6, 7, 8 run kind of ran its course. So what they're doing now is building multifamily homes, giant apartment complexes like that. So why are they doing so well? Because a lot of people can't afford homes. So now what do they have to do? They have to rent. So now they're moving over into these rental buildings. And to me, I find it very interesting. It's really about adapting to your market. These home builders are not stupid, right? They've got analysts that go, look, we expect interest rates to be rising. That's probably going to hurt the McMansion single family homes. Let's build luxury apartments. They'll always be in demand, especially when housing prices surge and interest rates get real high. People get foreclosed on. Where are they going to go? Move over to some apartment buildings, and hopefully they'll capitalize on it. So let's look at the charts of something like Toll Brothers, right? I mean, you look at that and you're going, holy cow, why are they not getting smoked? And that's your answer, at least from my perspective, Popcorn, is they're making up for it by having multifamily housing units. And I really didn't get to witness it with my own eyes until I went to this apartment building, and it was really incredible. Really just absolute VIP living. I mean, going from these lows, now granted the whole market's rallied here, but going back to these lows from October, you can look at where Toll Brothers is right now. That's a 45% gain. And I understand your frustration, Popcorn. You're like, how the hell can that happen? Real estate sucks. Rates are super high. It's because they have multifamily homes. And people are always going to need to put a roof over their head. And, maybe they're still living beyond their means by getting some of these apartments. They are not cheap, right? Of course, down here in Southern California, not much is cheap. I mean, you're looking at a 2-bedroom, actually a 1-bedroom, 1-bath apartment in a really junky place, maybe $2,700 a month. Yeah, it's really expensive. So that was Toll Brothers. How about Lennar? I think actually Halcyon House might be Lennar. It's one of the big firms, but all the charts looking pretty much the same. Is it? I forget Pulte. Is it PLT? Pulte Homes. I guess it's PHM. I didn't think it was that PHM, but judging by the chart, it looks just the same as the other one. So that's why, Popcorn. Be careful. This could keep on going if they continue to get occupancy. But they just reinvented themselves. They reinvented their business model to say we're no longer McMansion's cookie cutter homes. That's at least what I'm seeing from home builders. All right, I think that's going to do it for me. Yep, XHB. So you can look at the home builder ETF. Same thing, right? It may not be as dramatic as it has more companies in it, but still going back to those October lows, right, which is right there. The whole index of houses, of home builders, is up 26%. That's pretty damn good. If you look in contrast, let's go S&P 500 from those lows in October. Of course, it's a bit skewed because of that big spike right there. 17%, 16. So you're looking at far better performance for home builders when real estate seems to be troubled, right? That's the conundrum that we're in. Why the long red dropping candle? Did market makers clean a sell supply? Yeah, you mean, are you talking this one here? It does a delay, Rob, so I'm not really exactly sure which chart you're talking about. It might have been on XHP. No, I don't know. Anyway, it's Friday. I gotta run. I'm gonna go and have myself some more whiskey. Let me really quickly show you what's happening on Monday, and then we'll move on from there and wrap up the show. Here is your economic calendar for the 30th. We have 2 official trading days left of January. Remember, as goes January, so goes the rest of the year, so looking pretty damn good. If you look at this one, there's something ominously missing from the list, and that is the good old red, white, and blue. United States is missing from there. Not a lot going on for the U.S. on Monday, so it should be a rather quiet day from that perspective. You do have preliminary German GDP numbers coming out. Other than that, you have Japan retail sales, Australian retail sales, Swiss franc retail sales, a lot of retail sales for Europe. So retail sales numbers important, but none of this is really, I would say, groundbreaking, market-moving stuff, right? This is not critical. We don't have, like, you see the GDP numbers coming out for Germany and for France. Well, if you give me the EU GDP, that might sway me a little bit more, but nothing there, really. Okay, that's going to do it. Whiskey time it is. I hope you guys enjoyed the shows this week. I will have a couple guests on next week to lighten the load so you don't get bored with my conversation just looking at charts in the markets. If you are new, hit that subscribe button. If you like today's show, give me a thumbs up out there. Share the show with friends. Spread the word. Get the viewer base to get bigger is my goal. I've been doing the show for free for over 2 years now. Actually, yeah. Is it 2 years? Started in 2020. So this in March, I've been doing the show for 3 years. The good news is I'm making a little bit. As you guys may have noticed, I am using ad revenue right now, which pays for the uploading, the website, and some of the other stuff that goes along with doing the show. So apologize for the ads, but you know what? Got to make a couple bucks here and there to pay for the show, make it at least self-sufficient. So thank you guys so much. Hope you all had a fantastic trading week. Have a great weekend. Bill Addis will be on Thursday. Bill Addis will be on Thursday, and we're going to have... I'm just totally drawing blanks on my names. Anyway, we have a couple of guests coming on next week. Thank you guys so much. Have a fantastic remainder of your weekend. Do something fun. Be nice. I'll see you guys on Monday. Take care.